Hello and a very warm welcome. You're with World Business Report. I'm Sally Bundock. Here are the headlines. Do giant international firms pay enough tax? Google, Amazon and Starbucks will have to answer that question when they appear before British lawmakers today. Greece passes a budget with drastic cuts. Now the government says it deserves the next slice of bailout funds.
And here in Asia, Japan's economy shrinks at the fastest pace in more than a year.
Good to have you with us. Are giant multinational firms paying their fair share of tax? Today, senior executives from Starbucks, Google and Amazon appear before a parliamentary committee to defend their company's tax policies. Starbucks in particular has been under scrutiny after a report by Reuters said the firm had paid no corporation or income tax in the UK over the past 3 years and paid only $13 million over the past 13 years. In its defence, Starbucks says it's paid its fair share of tax and is in full compliance with UK tax laws. Well, let's talk about this with Kevin White, UK Managing Partner at De Vere Group, which advises companies and people on international tax issues. Thanks for coming in, Kevin. First of all, just explain how the likes of Starbucks, Google, Amazon do get away with paying much lower tax.
I think it's very important to state that these companies aren't working outside of the law. They're working to the letter of the law. By channeling their UK business through an overseas company, Ireland, Luxembourg, places like that, they get around paying the tax in the UK by basically channeling it through other means.
Now, obviously, for those who compete with Starbucks, maybe an independent UK coffee shop, it's very difficult for them to stomach how this works. Some would just say it's completely unfair. Starbucks argues, well, we're going by the letter of the law. We're just based somewhere else.
Yeah, I mean, I think with regards to, I think that's the important thing, the law of it, whether it's moral or immoral. These companies don't get into business for moral reasons. They get into business to make profit. I think their moral duty really to their shareholders. And yes, it will be hard for the smaller companies to stomach that side of things. But I think companies, big or small, mitigate tax in one way or another at some point.
Now, here in the UK, some financial chiefs have got to speak to British parliamentary lawmakers to discuss this problem. I know the OECD is looking on it from an international perspective. So what can be done to change this?
I think it's very hard. I mean, I think what you've got an international problem as opposed to a regional or specific country problem. I think you could look at potentially taxing companies a small amount on overall turnover as opposed to profit, which can then be mitigated overseas. Or potentially look at some kind of global tax treaty, in which case the G20 would have to get involved. Very briefly, so the conversation started. Do you think we'll see some change? I think it's going to be a longer time before there's change. In the UK, from a regional point of view, it would be easier. The government have got the power to change the laws. I don't think it's going to happen anytime soon. All right, Kevin, thank you for your time. Very interesting. We will keep an eye on that. I'm sure you've got views on that story yourself. Send them to us. Now, let's move on because the week has started in Asia with some very grim economic news from Japan. In the 3 months to the end of September, the economy shrank at an annualized rate of 3.5%. That's the worst performance since last year's devastating earthquake. Let's go live to our Asia Business Hub in Singapore, speak to Mariko Oi. Mariko, we knew that Japan, we pretty much knew it was headed back into recession. And this is the news we were waiting for, isn't it?
That's right, Sally. As you say, a contraction of 3.5% from last year's level, but also, as you say, from the previous quarter, Japan's economy shrunk by just under 1%. And many economists are forecasting the economy to shrink again the next quarter. And if that happens, Japan will officially be back in a recession. The country's economy has been recovering rather resiliently from last year's earthquake, but it seems like a few external incidents, such as the Eurozone crisis, as well as a slowdown in China, which is Japan's largest trading partner, are starting to affect Japan's economy. And of course, as we've been talking about for many months now, the strength of the Japanese yen affecting exporters as well. But also we had the territorial disputes between Japan and China, and which prompted anti-Japan protests in China. And even though that took place in September, that seems to be starting to affect Japanese companies' performance as well. So as you say, very dismal figures from Japan Japan today, and it seems like quite tough time ahead for Japanese companies.
All right, Mariko, thank you very much indeed. We'll look at the impact that's had on markets later in the show, but let's now take you to Greece next. As you've been hearing, the Parliament there approved the nation's 2013 budget very late on Sunday. It does include more than €9 billion or $12 billion worth of spending cuts, which will hit public sector wages, pensions and other benefits. Greek leaders hope the measures will satisfy as international lenders, the IMF, European Central Bank and European Union, insisted on further cuts before handing over the next instalment of bailout funds worth around $40 billion. Without that money, the Greek government will run out of money this month. Well, let's speak to Thanos Vanvakidis, who's the head of currency strategy at Bank of America Merrill Lynch. Thanks for coming in. Just explain how Greece will continue to operate, because we keep saying it could run out of money this month. What's the actual situation?
Well, according to the official statements of the Greek government, they will run out of cash towards the end of this month. The government has just approved the measures that are required for the conclusion of these reviews. In the next few weeks, we expect the Troika to address the outstanding issues, particularly how to cover the funding gap in the program and address concerns for debt sustainability. If all goes well, Greece will be able to get the next tranche by the end of this month.
But also, as well, in the meantime, Eurozone finance ministers who are meeting today in Brussels are going to come up with some sort of contingency plan, aren't they, to keep Greece ticking over? They don't want to see Greece default because the next tranche of money isn't coming in time.
There are 5 billion of T-bills that mature on November 16, and we expect Greece to issue additional T-bills to roll over this so that it will avoid default. These T-bills are with the ECB. The second step that the Eurozone authorities need to address is how to respond to IMF concerns that the debt dynamics have deteriorated so much that legally it's impossible for the IMF to release the next tranche. And on this, they have to agree on some form of official sector losses, either now or to postpone the decision for early next year.
Now, we've got the budget through. They did last night. In the middle of last week, they passed a new set of austerity measures as well through Parliament. Obviously, it all came with a lot of protests, a lot of anger shown by the Greek people. What will next year be like for Greece, given the budget they announced overnight? You know, it's going to be a very difficult year, isn't it?
Absolutely. It's a make or break year for Greece. The Greek economy has gone through a serious recession. Compared actually to previous crises, it compares only to the US Great Depression in the early 30s. Next year, the government has to prove that this time is different, that they will address implementation problems in the program so far, that they have turned a corner. And at the same time, the Greek authorities, together with the Troika, have to persuade markets that Greece will stay in the Eurozone. This is the first key step to turn it around and start having a recovery in the Greek economy.
All right, Thanos Vanvakidis, thank you very much indeed for your time. And of course, Greece is a story, as you know, we're very much across here. Let's squeeze in some other stories now. Shares in the smartphone maker HTC jumped almost 7% during trading today in Asia. That's after the company announced a global settlement with Apple over patent lawsuits. The two firms have signed a 10-year licensing agreement. It ends a costly legal battle which started in 2010. Hong Kong will have more jobs in the financial services industry than London by 2015, according to a report from the economics consultancy CEBR. The report says by 2015, Hong Kong will be the world's main financial centre and Singapore will be close to overtaking London too. The latest Bond movie, Skyfall, had a strong opening in North America over the weekend. It took almost $88 million. That's the best opening weekend for a Bond movie starring Daniel Craig, of course. Skyfall has taken more than $500 million globally since its launch in late October. And Russian aluminium giant Rusal has posted a third-quarter loss of $118 million. It's blamed Europe's economic troubles and China's slowdown for a decline in the demand for the metal. Rusal supplies a lot of aluminium to the car industry, which has seen a sharp slowdown in Europe. Markets in Asia are quite mixed today. No surprise at all to see that Japan's having a very rough day off the back of that news about its economy back in recession, as we were expecting. The Nikkei down almost by 1% at the moment. As you can see, Hong Kong keeping its head above water. Let's look at the currencies. The strength of the Japanese yen, always a big problem for Japanese exporters and its economy. I'll see you soon for a look at the papers.